morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, March 27th. Another reversal in the marketplace. Dow actually opened up. All of the indices opened up, and then again we sold off, and that is giving us a big red flag. As we all know, I've been stating this for the last week or so, that I do see something turning here. It could be a good local top in the marketplace. We still need some further evidence. I'm going to concentrate on the indexes, a couple of indicators, but mostly just on the ES, the bonds, and some key stocks that I wanted to show you how they have now reversed. Okay, quickly on the numbers: Dow Jones down 98, Nasdaq down 60, S&P down 13, and the Russell down 22.5 points. So not a pretty day in the market at all. We were looking for higher prices for the day, and that failed, and the markets actually started to intensify, getting closer to the end of the day. We did have some good durable, good numbers that pushed the markets up early on in the session and clearly reversed with, again, tensions intensifying in Russia and the Ukraine, additional sanctions by the U.S. So things are starting to heat up over there, and there's really nothing good out there. So I guess at one point the markets will say, well, bad news is good news again, so therefore tapering's going to stop, and yada yada yada, and maybe they might not raise rates in 6 to 8 months, but whatever is basically etched in stone by the Fed is going to continue unless something really drastically happens. And right now this is just a little blip in the geopolitical arena here. On top of it, we had some banks, the bank test, stress test. 5 banks failed. Citibank had issues as well. So some of the banks took it on the chin, not helping the markets as well. So what happens? Remember, guys, risk off happens very fast. And when we have huge amount of retail buying on margin, remember, they have to sell good quality positions to finance their bad stocks. So what happens? You get full liquidation across the board, good and bad. So remember, you can't really hide too well. Well, a couple things that I do like that I noticed that are holding up well is the old school tech, Cisco, the Intels, the Microsofts. They're holding up relatively well to what the market was doing. Even alternative energy that we were looking at, really across the board, just taking it on the chin. And that's why I said take a step back. Let's wait and see what happens. And in front of you, you're looking at the ES S&P contract, the E-mini S&P contract, the futures. And this is where we've gone in the last, let's say, 6-7 trading days. Nowhere. Gap up, sold off, into the close. Gap up, and then we just kind of drifted higher. We actually gapped up, sold off. Gapped up, and then we ran up higher, gapped up, sold off, again gap up, sold off, gap up, sold off, gap up, sold off again. So that's the theme here, and this is a chop fest for individuals who are day trading. If you're not fast enough, or if you're trying to look for trades and they're not working out, every stock that I've noticed and I've looked at and I'm sitting in front of the screens all day, when they gap up and then they smash lower, the damage is already done. Stocks don't just automatically run back up again, because now everybody's getting nervous and just start liquidating their position. So even though you might have the index run up, most of the stocks are pretty much, the damage is done, especially when you had a gap up and then sell off. Damage is done already. So very, very important to understand that right now the markets, to me, look like they're carving a top. And as you can see, this is just absolutely garbage trading here. This is something that you want to stay away from. Keep the palate dry, load the guns up, and get ready, because when the markets do correct, which I think they will, and as you can see here, this is yesterday, did absolutely nothing all day until 1:30, and then now what happens is you're at the end of the day. You don't have much time left to put on a position, so you wait for the pullback. The pullback happens at 3 o'clock. And then you're selling off it into the close, which is, to me, is highly risky, because if that fails and you run back up again, you're only trading that you do at the end of the day. You're going to get stopped out. So what you do then is you look for a good list of quality stocks that have held up in this sell-off, and then you look for a bounce for tomorrow. Now, meaning today, if we have a good bounce today and then we start to fail, that's going to be the first cue today to get actively short, again, for a day trade now, okay? We're not talking swing trade at the moment, because price hasn't told us yet that it wants to go down. Now, price action is saying that we have eager sellers at these levels, but we haven't broken down into some key pivotal areas, and we haven't made lower lows and lower highs. All we've been doing is going like this, chopping around here. Okay, so that's why we want to make sure before we put on any swing trade positions that price is indeed moving lower, and then we hit some key pivotal areas. Now these two areas here are overnight support, overnight lows from the two previous days. We held that one here, and then we broke down and held the lower end. So be very careful here. We need to understand that bulls are fighting, then bears are getting eagerly to look to sell this market at the upper end of these levels, and we are at key extension, which I'm going to show you. Everything is pointing to lower prices. However, price action has not. Okay, the price has not. Price action is telling us that, yeah, we're chopping around here, volatility's picking up, and we're looking to vacate the area here. So I do think the lethal pass resistance is down. We're getting close to the sell and may go away. We do have seasonal strength, however, between now and sometime at the end of April, but that doesn't matter. We can get a sell-off between now and May at any given time. Okay, and I think the markets are healthy to sell off. I really do think it needs to sell off here. Okay, so let's get into some of these indicators here. Here is the bar chart momentum indicator. Same thing like a McClellan oscillator that I show you guys. However, this is for the extreme short term, like the next day. When we get below 99 or 101, we look for extreme readings, and usually the next day we get a bounce. Now, we're below 99, obviously, and we're at 98 and a half almost. So I would see that the markets bounce here today. Now, if the markets do in fact bounce and we get back up into this 99 area or 100 area, I think that's going to be a very good shorting opportunity. Remember, we still need confirmation and we need a trigger, but I do think that that's the areas what I'm going to be looking for today. And remember, guys, you didn't miss anything. You did not miss anything at all if you haven't really participated in this move. All this move was just a bunch of chop right now. So be cautious, be nimble, and make sure you have the best trade setups ready to go. Watch the stocks that you're looking for, and then pounce on them once you get your signal from the market, and then of course the stock itself. All right. So anyway, we are down here lower, so I am expecting a little bit of a bounce, but I do expect the bounce to fail. Now that does not mean that if we rally today, that the bounce has failed. We can get into tomorrow. Remember, we have Thursday and Friday. We have end of quarter, end of month window dressing. Now, this thing could go either way. It could go to the fact that funds are protecting their quarterly profits and they're going to sell. Okay, that's one way. Or they want to mark up the books that they have of these positions, and they're going to keep the market steady for the next couple of days. That also could happen. No one knows. So I would be inclined to say that we rally a little bit and we hold these levels for the next couple of days, and then next week would be the tell sign going into April. Okay, but again, it's just what I'm thinking from what the last bunch of quarters that I lived through. So this thing could go totally either way. Whatever happens out in Ukraine, whatever happens in Europe. So just keep in mind, keep an eye on what's happening here. But again, this is a very good sign that we're looking for some sort of a bounce, and then a bounce actually to be sold into. Okay, McClellan oscillator, what can you say? Lower lows and lower highs again. As you can see here, not good at all. We're down now in the oversold territory in the stochastics. Not quite oversold in the RSI, but again, plenty of room to run to the downside before we hit these extreme oversold readings. Okay, and we're making lower lows and lower highs here, so not good. Not good at all. Now the VIX kind of holding in there, but had a big gap up. Had a big move yesterday, but still a cap below the 20 to 50 to 200 moving average. But again, if this market starts to sell off, this will go, and we do have some positive divergence in the VIX in itself. So watch the VIX here, guys. If we start to break out again, that's also going to give you another clue that the markets are indeed moving lower. Now another big clue is the bullish percent. SPX goes off a point and figure chart, very reliable. As you can see, we did get a whipsaw here. Remember, I showed this yesterday. Let's see if we get a little bit of whipsaw, and usually we do, but you always have time to get into the short side if you are playing off of this signal. But here's just a guide for me. I like to say, well, this is now. If we remember, we got this February 10th. We got a buy, and look what happened. We had a beautiful run up into March, early March here, and that gave us a longer term trend. Now that we had a little bit of chop, now that the BP SPX is way away from the 8, I would think the next back test here would give you a great sell signal to look to get short again and look to at least the February lows here. Okay, I think the March lows will easily get taken out here, guys. All right, stocks above the 50-day moving average, as you can see, plenty of room to run to as well before we get to these extreme readings. So all the indicators are pointing lower with plenty of room to run to the downside. So we have not even gotten oversold in the marketplace. All right, now what we always mention is the bonds and of course the Japanese yen, and we can look at the dollar yen as well. But as you can see here, we are now still capped, but we had some good movement in the yen. And let me just show you on a 5-minute chart here. You could see yesterday, well, this is overnight, but if you looked at yesterday's price action, this is what I was saying here. This is all that 1 o'clock, 1:30, a big run up, and then a big push into the close. So you could see that, and this is crazy price action too as well with the yen. But again, once the yen runs up, the market goes lower. That's exactly why I keep saying, please watch the Japanese yen. And if you can't do that, you could look at it via the ETF, the FXY, same thing. Okay, but again, we want to see what the yen does. Now, remember, we are capped here. We do have Fibonacci extensions, and we have a bunch of resistance areas here, big Fibonacci cluster with extensions and the 382 Fibonacci retracement. So this needs to break out. But if this breaks out, I suspect bonds will break out and the markets will start its sell-off. Now, that is what I'm watching here, and I suspect I would advise you guys to watch the yen itself, okay? Now, bonds. We were talking about bonds here, and here we go. Okay, we were talking about bonds, and the bonds, I said, look at this bull flag. To me, this is just a channel moving lower on pretty much lower volume. You'll have volume spikes in between, but look what's happening. We're breaking out of this downtrend channel, which is really a bull flag, flagpole, bull flag, and now it's capped under that 200-day moving average. And remember what I say, bonds are the smartest guys in the room, and they've been it for over 100 years. So remember, when the bonds start to break out, money is rotating out of equities and running into bonds and safe haven sectors. So you have to understand this. And when you see bonds start to move higher, I would watch out and look for, again, additional market weakness. And again, the bonds, you can look at that at the TLT. And the TLT showed that we were showing you yesterday about a breakout. And look at what's happened. We're just about there. We actually broke out yesterday, and I showed this to you on the other chart, on the Ninja chart. But you can see we broke out yesterday. So always the first breakout, usually get a little bit of a back test, but didn't break out too much. But again, this is a warning sign. This is a big warning sign, guys. So just please keep that in mind when you see something like this starting to break out. Okay, everything is pointing to lower prices. Here's the monthly chart of the ES. Now we have 2 days left, but what this is going to do is provide us with a doji. Now the doji is not a bearish or a bullish candle; it's an indecision candle. So it looks like the marketplace, but usually followed by an indecision candle, you need a breakdown from this area to confirm that we are headed lower. So we're going to need another month of price action, or we break out to the upside. Okay, so we do have the extension here, the 1272 from the recovery lows of 2009. This is a big extension, and this is holding the marketplace for the last 4 months. Okay, so this is another reason why we haven't gone anywhere. But your Q is 1821 in the bigger picture. If we break, that's the monthly candlestick. If we break below that, that's going to add fuel to the fire for additional selling in the markets. Okay. Now we have the symmetrical triangle here, the 1272 again capped. We did have a distribution day yesterday, a market sell-off. We are now below the symmetrical triangle, barely clinging to the 50-day moving average. Back into maybe the middle of this symmetrical triangle, and then fail would get us to at least the 200-day moving average, and then of course this trend line support here, okay, which coincides pretty close here. We're up about 5 1/4 handles. Again, we're looking. I believe we have GDP numbers today too. When we have GDP numbers today, you have to be careful because again, this thing could move quickly in the next couple of days in the ES. Okay, but this is what I'm looking for. I'm looking at a break below yesterday's low, or a break above yesterday's high. That's going to be range bound. Okay, and that's where we're going to be looking for, taking cues, taking clues. Of price action of where this market may be headed. And again, you can see the A is starting to roll, breaking below the 20. We're getting a little bit of movement rolling over here. But again, we are right in the middle of our ranges and our stochastics on our RSI here. But again, I do think that we get a little bit of a pop here today like we're getting now. And if this fails, I think you're safe enough to start looking to nibble into a short position in equities. And then we identified this head and shoulders pattern a few days ago. And I just noticed that everybody else is starting to look at. We have a head and shoulders pattern on the hourly chart. So hopefully you guys are benefiting from this. We have the 1817, 1820. And remember, we still stuck above that 1838, 1840 level. Okay, we get that pull off, and now we're just kind of drifting higher here on no volume, and volume is always light in a pre-market session. But let's see if this can be sustained, and we can get a little bit of a pop to the upside. And again, I think that would be a gift. 1838, 1820, 1817. Right now, the area is going to be the first. That's going to be the target, excuse me, of the head and shoulders pattern, right around 1817, 1820. And there are a lot of stocks that are actually faltering, and I'm going to show this to you. Now, as you can see, we talked about big cap tech, the old school tech, Intel, your Cisco's are holding up well here. Let's take a look at Cisco. As you can see, these are daily charts now, held up very, very well. Microsoft actually held up well. So money is being hit, is being put to work in these safe stocks, these lesser beta, higher beta names. Now, if you look at the beta names, these are the high flyers. They're the first ones to go. Oh, excuse me. If you look at the Teslas, TSLA, look at the sell-off it had in 4 days. I mean, just brutal. BIDU actually sold off very, very hard here. BIDU. As you can see here, look at this waterfall sell-off. Really, really bad. Apple actually Apple held up pretty well in the last few days. Actually, doing quite better than all of them. LinkedIn, LNKD. These are the higher beta names that are actually taking it on the chin, and that is your first clue that the leaders are now breaking down here, guys. Okay, so this is what I'm saying. Be very careful when the leaders start to break down, and then everything else starts to follow suit here. Okay, now it's been a gentle movement because price action is just basically moving in a big range. But once it vacates that area, you're going to have increase in selling and increase in volume that will confirm the selling has begun, and then we could look for some sort of correction. Now remember, right now we are not there yet. We are just chopping around, but what we do see is our indicators moving lower, pointing to lower prices, our leaders breaking down, our leaders in our sectors breaking down. Let's just show you real quick. I've been showing you this yesterday, IWM. Look at this. Terrible, terrible price action, leading the markets lower. QQQ, NASDAQ, terrible sell-off, breaking down 8 to 20 to 34, the 50. So our leaders are breaking down. IYT, which is the ETF, the transportation ETF, breaking down. So we have our stock leaders breaking down, our sector leaders breaking down, stocks are breaking down, and our indices all pointing to lower prices, and we have our key indicators pointing lower. So the path of least resistance is lower, but I would love to see a little bit of a bounce even today, tomorrow, and we can start establishing some short position and really get into the groove of things now. So waiting a week or so is okay, and nibbling a little bit if you had to get stopped out, no big deal. But now is the time where the markets actually will prove itself. Are we actually going to challenge the highs, or are we moving lower? My guess is that we go lower unless something really happens. Some real good news comes out of the marketplace, at least for now. And remember, a correction is actually good for the markets because the longer-term picture still remains intact. All right, guys, be careful out there. Have a great day. Let's see what happens today, and we will talk to you tomorrow.